Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 1st of May 2026. The first chart is the US Dollar Index Futures, which are trading in a range now. Although the market was down for the week, it's really trading in a sideways range, as you can see here. Price did move towards the highs of the range during the week, but it also tested the lows of the range, closing almost mid-range by week's end. Volume remained around the average, as it has done over the last 3 weeks. So this market's trading sideways without any real intent at this point in time. This is the E-mini S&P 500 Index Futures. They closed slightly higher this week. The market did test for supply below the previous bar's close just briefly for the week before edging higher during the week towards the end of the week, and just came back slightly to close slightly off its high on Friday when it moved into consolidation mode. The market could still come back and test the highs of the range, previous range, for strength at some point. It's not really accelerating higher. Last week was a consolidation bar testing the market for supply. It was a modest push higher this week. So there's still a reasonable chance the market could come back and test the previous highs of the range for strength. It's about a 50-50 chance at this point in time, I imagine. Volume did drop a little below the average this week. It was reduced and slightly below the average. And with the modest push higher, there was a little lack of demand in the market. It really just floated higher on a lack of selling pressure rather than pushing higher with real demand behind it. And that does increase the chance that price will come back and test the previous highs of the range for strength. That's here. So it's a 50-50 call at this point in time. This is US Treasury 10-year note futures, and they closed lower this week. They're also trading in quite a range at the moment. It's a bit of a broader range than the US dollar index futures. They're trading in that range at this point in time. Prices pulled back over the last 2 weeks. Volumes remain below the average. It was slightly increased this week, but below the average overall. This week's bar did push lower and recovered slightly off its lows. So there is some buying support in the market, albeit modest. There isn't a great deal of intent being shown in this market at this point in time. We'll just wait and see for this market to either break out or break down below the range of this trading range. This is copper price futures. And copper price futures, after moving higher and testing the highs of the range for strength up here, price has just come back slightly over the last 2 weeks in consolidation mode. You can see that volume's reduced both weeks. Selling pressure is low, and price has just come back within the range of this stronger up bar, and it's effectively consolidating. When price makes good gains over a relatively short period of time, supply will be drawn out. There'll be supply from the left. There'll be profit taking from people who bought from below, and there'll be people who are thinking the market is overbought and are shorting it, expecting it to go lower. And that supply needs to be absorbed if price is going to continue higher. And that's why when the market does push higher like this, over a relatively short period of time, the market then moves into consolidation mode. And it effectively forms a bull flag like this. And that's why they form. So this market is consolidating right up at the highs of the range. If this period is successful, you'll see the market break out in response at some point in time. Gold price futures. Gold price futures have come back and are also consolidating. They did tag the lows of the range during the week, closing slightly off those lows by the end of the week. So there is some buying support in the market. It is only modest though. Look at the volume. It's well below the average. It was reduced over the last 5 weeks, well below the average. And it does appear that both demand and supply are both much lower than they have been previously. So the market's effectively trading in consolidation mode after breaking down on this bar and finding support on this bar. So in this broad range here, you've seen the market move into a sideways range to a large degree in here, like this. It does appear that there's reasonable demand at the lows of the range, and there is still supply being drawn out at the highs of the range. And so the market is trading sideways in consolidation mode. Silver price futures. Silver price futures is doing a similar thing to gold, as you would expect. There was some demand seen here where price did push up over a period of bars when strength was found. But there was no intent to push higher from this point, and the market's moved into consolidation mode since. Price remains in this sideways range, and volumes remain below the average, similar to gold. Light crude price futures, and light crude price futures have been trading with very wide ranges, very exaggerated ranges over what you would normally see. Look at all these normal ranges down here, and look what we're getting now since the Middle East issues have arose. The market's traded up to the June 22 highs here and have respected that level quite well. It's adjusted slightly, but you can see that the market has respected this level pretty well. It did attempt to break out here. Supply was drawn out. Since then, the market's recovered and pushed back above this level. This week, spread was quite wide again with a mid-range close. So there was supply drawn out in the top, no doubt. Although volume was reduced and was below the average this week, which suggests that demand was actually a little reduced this week, particularly later in the week, and that allowed the small amount of supply to push price down for a mid-bar close. Look for the market to test this level again next week, as it has done many times more recently. Look at these clustering of closes in here. It's an important level on the chart. Obviously, the market's respecting that level, and I think that the market will probably come back and test that level for strength next week. Into the currencies now. This is the Euro-US dollar currency pair, and similar to the US dollar index, which you would expect, this market's trading sideways in a little range in here without showing any intent towards the upside or the downside. It's trading sideways on slightly below average volume. I imagine the pound is doing the same thing or very similar, perhaps slightly stronger than the euro. There's the little range. Price did make a modest attempt to break out, but it did close back adjacent to the highs of this up bar. So it's trading sideways in a range. Slightly below average volumes remain. There's no great intent being shown. Perhaps this market is showing slightly more intent towards the upside than the euro. Japanese yen currency futures. This is likely a news event or an announcement of some sort. This widespread, you don't get that with high volume like that unless there's some news event or announcement which has caused the market to react quite strongly. It's pulled back, traded below the previous bar's close, accelerated higher, and then drawn out some supply at the range above to close back just below that level. The response will probably be a test for supply early and then a response higher or lower depending on how much supply is drawn out and whether there's any more announcements or events taking place in this market. Aussie dollar currency futures, and they've remained quite strong. The market's traded right up within the highs of the 3-week range, that's this bar here, for 2 weeks now, and you're getting some kind of bull flag forming, it's consolidation taking place in that range, right up in the highs of that range, which is generally quite strong. I think this market might make an attempt to push up to the next level in response. Bitcoin futures traded right up at the highs of this little range that I've marked many weeks ago now, just so you can see it comes from where the market found support previously. I've just drawn it across. The market spent some time in consolidation mode, attempting to avoid further breakdown and build up some strength for an attempt to push higher. There was some vulnerable trading at the lows of the range down here, but the market has found sufficient strength to push itself up, and now it's trading right at the highs of the range here, looking like it would like to push higher. I anticipate there will be some supply drawn out from the left here and also up here. So this market, when it's traded down here in this range, has probably removed some of the supply that may be above, but there will still be some there. So if the market does attempt to push higher, it'll probably have to absorb that supply over some sort of period, depending on how much there is, before it can continue higher. And that's market mechanics at work there. The market looks well placed to make an attempt to push higher, and then we'll see just how much supply does sit to the left here. Initially from this breakdown here, this gap lower where the circle is, and then if there really is strength, a push up to this range here where the market attempted to consolidate previously and failed, which would have trapped holders in here, short-term holders who will be waiting for price to come back to their level so they can get out at break even after being underwater for a considerable period of time. If supply is overwhelming up here, where the market gapped down, you may see price come back a little more deeply to challenge the sellers that have emerged prior to any attempt to push higher again. That's just how the market will work, depending on how much supply is drawn out. If supply is light, it'll push up, it'll trade like I've marked here, with a shallow pullback and a little bit of gyration to absorb the supply. And if it's light, it'll attempt to go higher again. If supply is strong and even overwhelming, it'll pull back more deeply and then perhaps trade sideways for a bit before it attempts to move higher again. This will be an attempt to remove that supply. It's certainly looking a lot stronger than it has done for quite some time. Back to the US dollar index futures just quickly. You can see the market's trading in a range. It's been trading in that sideways range for 3 weeks now. In there, volumes over those 3 weeks have been about average. So it's genuine trading. And the market's found an equilibrium at this point in time. That'll fail at some point and price will push lower with some intent. Trading below that bar's low, we'll consider it a breakdown. Or you'll see price attempt to push higher. But at this point in time, there's an equilibrium being found and the market's trading sideways in a range. Okay, thanks for your time. Back again next week. See ya.